Hi there, Happy Lunar New Year. This is the routine weekly traffic light update for the week ending January 27, 2017. Prior to going into the detail of the presentation, here are the disclaimer. Traffic light and the capital appreciation point are the results of proprietary risk analysis model and should be used as a part of your due diligence process. Crystal Clear Indicator is not a licensed financial advisor. Investing involves risks. Here is the agenda. We will review the traffic lights on S&P 500, Dow Jones, and NASDAQ Composite. We'll be looking for bearish and bullish trades. Here's the traffic light S&P 500. Let's go over the legend. The x-axis is the time. The oldest period is from the left, and the latest period is on the right. Y-axis over here is represent the daily close of S&P 500. Blue line here represents the S&P 500 daily closes, SPY in this case. Green line here is traffic light S&P 500. This is the proprietary line from Crystal Clear. The horizontal purple and red lines apply to the green line. The red line here is the long-term conservative line. When the green line crosses the red line as shown here in 2000 and 2008, it is better to take a long-term conservative position. The purple line is a long-term position indicator. When the green line crosses the purple line and crosses back, it is less risky to take a large position in a long position. Currently, the traffic light S&P 500 is in green. When there is a pullback, it will be a good idea to get into a long-term position. Look at in the past what happened when it's in the green. Usually, it's safe to go in and the trend ascends. Same thing here. In the green area, there will be pullback and safe to go in. In November 18, 2016, we compared the current situation to that of mid-2012. In the 2012 period, the index attempted to reach a new high. They will pull back, but each pullback is less severe than the one before. Let's observe whether the current market shows similar traits. It is possible that the current ascending strength will not be as strong as that of 2012 because the current PE ratio is relatively higher than the period earlier. Let's look at the traffic light Dow, an intermediate indicator. This indicator has a good history showing intermediate bullish and bearish signals, especially when the bullish red line and the bearish green line cross over, as shown here, cross over, again here, again here. When in the 2010 period, when the red line made a new higher high, the green line stayed low, the market ascends. In 2011, when the red line formed a bearish divergence, that means the price, as the S&P 500 price goes up, the red line goes down in opposite direction. Eventually, it led to a more severe correction. Let's look at the current situation. The red line started to descend at a resistance level. To be in a long position, it is better when the red line starts to ascend, as shown here or here, near the support line area. That's in this orange solid line or dashed line. I will zoom in the latest period in the next slide. Here's a traffic light Dow Jones zoom in. Here are some bearish and bullish view. On the bearish side, first, the red line is descending. When the red line starts to descend at the resistance level, it is usually the end of a short-term bullish run. Second, a bearish divergence could be forming. As the index makes a new high, the red line does not. On the bullish side, the green line continues to descend. I always say cautiously, the intermediate bullish trade continue and pullback are expected. We can see the similar things in traffic light NASDAQ. As you can see, traffic light NASDAQ red line made a new high recently, all-time high. In April 2010 period, and the index retrieved from this type of situation with a significant pullback. In May 2013 period, there was also a smaller pullback. I will zoom in the mentioned period in the next slide. In both situations, the index started to descend when the red line started to flat out. The bounce started after a cap on S&P 500 occurred in one of the events. That would be 2010 period. There's 1 day 1, 1 day 2, 1 day 18, and 1 day 4. In the 2013 period, the cap almost occurred, but did not quite occur. If you desire to know more about S&P 500 cap, you have the privilege to access the Starter A servers for free during the trial period. Here are some bullish and bearish observations. On the bullish side, the red line made a new high recently as the index made a new high. Second, there was bullish crossover recently. On the bearish side, the red line started to descend on December 13th. This piece of information was released on the subscriber website on December 13th with email notification. In summary, traffic light S&P 500 is in green and is showing more long-term bullish signs. Traffic light Dow and traffic light NASDAQ show a more intermediate bearish sign. Traffic light Dow and NASDAQ red lines descending, expecting pullbacks. Consider to take some profit on long positions and to increase cash positions. With unsynchronized bullish and bearish trades, the market tends to consolidate. S&P 500 cap might happen before the bounce starts.